Against this backdrop, the Monetary Policy Committee, that is MPC, met on 6th, 7th, and 8th April, and based on an assessment of the macroeconomic situation and the outlook, voted unanimously to keep the policy repo rate unchanged at 4%. The MPC also decided unanimously to remain accommodative while focusing on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. The marginal standing facility, that is MSF rate and bank rate, remain unchanged at 4.25%. Further, it has been decided by the Reserve Bank to restore the width of the liquidity adjustment facilities, that is the LAF, L-A-F, that is the LAF corridor, to 50 basis points, 50 to 50 basis points, the position that prevailed before the pandemic. The floor of the corridor will now be provided by the newly instituted Standing Deposit Facility, SDF, which will be placed 25 basis points below the repo rate, that is at 3.75%. I shall explain the details in this regard in the later part of my statement. Let me first dwell upon the MPC's rationale for its decision on the policy rate and the stance. Since the MPC's last meeting in early February 2022, the expected positive benefits from the ebbing of the Omicron wave have significantly changed. Omicron wave have been offset by the sharp escalation in geopolitical tensions. Let me just read this sentence again. Since the MPC's last meeting in February 2022, the expected positive effects of the Omicron wave, expected positive benefits from the ebbing of the Omicron wave have been offset by sharp escalation in geopolitical tensions. This has significantly changed the external and domestic landscape. Concerns over protracted supply disruptions have rattled global commodity and financial markets. Given the significant share of the two economies engaged in the war in global production and exports of key commodities like oil and natural gas, wheat and corn, palladium, aluminium and nickel, edible oil and fertilizers. Now these are, I have listed out the points which basically are at the root of the concerns over the protracted supply disruptions which are causing all these turbulence and in all these areas. So concerns over protracted supply disruptions have rattled commodity and financial markets. Given the significant share of the two economies engaged in war in global production and exports of key commodities like oil and natural gas, wheat and corn, palladium, aluminium and nickel, edible oil and fertilizers.